Bitcoin, in really less than a month, has dropped 20% from its peak in February at 25,000 to a little bit below 20,000 now. Now, I want to end this call on cryptocurrencies because I was on CNBC with Brian Sullivan on his new show. I think it's called Last Call on CNBC yesterday. And Silicon Valley Bank was breaking. And, I wasn't even supposed to be talking about that. I was supposed to be talking about innovation. But I think Brian brought the topic down to, see, crypto dominoes still falling, hearkening back to Luna Terra last year and FTX and 3AC and Celsius and all of the implosions. And what I said to him is, if you think about it, first of all, just think about crypto. The Bitcoin blockchain and Ethereum, those two blockchains have not skipped a beat. There have been no transactions interrupted. The smart contracts, which are rules-based, when there's a margin call, a stock goes down or something drops in value, there's an automatic margin call. It just happens automatically in this over-collateralized system. I think what we're seeing today is in some of these banks, under collateralization. But in both cases, what do we have going on? These are centralized entities, and they're not transparent. Certainly when it came to FTX, not at all transparent. Centralized, opaque, completely opaque. The banks have to do more disclosure, so they're not as opaque. You could see that they were upside down in terms of interest rates, having to pay up for deposits, but earning a very low yield to which they committed at a bad time when interest rates were very low, thinking they were being smart. And so this is nothing to do with crypto. In fact, Silicon Valley Bank, I don't think you're going to see a mention of crypto at all there. So it has nothing to do with crypto, but it does have something to do with what happens during banking crisis. Usually these banks are upside down. They start losing deposits. In the case of Silvergate and Silicon Valley Bank, there's a run on the bank. When you get Peter Thiel and other famous investors and well-respected investors saying, get your money out of there, they're going to take the money and run. And so this is nothing to do with crypto. This has everything to do with Fed policy, we believe, taking interest rates up so dramatically, the most rapid rate in history, and taking money growth down from 27% 2 years ago to -3. So that's a 30 percentage point swing. That has never happened. We've gone back to the Great Depression to see if that was the case back then as well. It wasn't. And so I think we're going to see more ramifications, but each one of these is a reminder to the Fed. And I think the Fed's rhetoric is going to change pretty dramatically during the next 3 to 6 months.